Hey traders, Nick Shaheen here recapping the week ending October 3rd, 2014. Big day in the markets today. This came on a Friday, obviously options expirations, but more importantly, we had a jobs report that was, of course, all important. Everyone seems to be trumped up to be all important. Regardless, the jobs numbers came out a little better than expected. They revised the bad numbers from last time up, and everybody popped and then immediately reacted violently to the down for a fraction of a second because the unemployment took a five handle. I think it was 5.9%, which scared everybody. We're still flinching from Bernanke used to watch 6.5, so we're now under 6. So the thought is good news, bad news thing. But then we recovered from it and all was good. As far as overnight, the Eurozone was not falling out of bed given the day we had yesterday, so that was good. Hong Kong crowds shrank, so we didn't expect coming into today much news from there. I think, I don't know fundamentally if they solved the problem or not. I doubt it. Ebola coverage is heightened, but we as in traders seem to be starting to get a little immune to the gyration of it. I mean, not moving the market based on headlines for that. Um, Apple, in my opinion, going into the day, I noted that it would be the pivotal stock of the day, and sure it was. Yes, it ended red. However, it had a couple of downgrades, and it's a heavyweight. So they tried to sell it hard. This is Apple. I said Apple has a chance to, if Apple can shake off the two downgrades, then the bulls have a chance to overrun the bears today, and they sure did. However, they still stayed within the ranges that I had set before the day, so everything was expected today within the ranges, speaking. The Apple, they tried to sell it off, but then bounced and then meandered right here. This to me is somebody's messing with us. That's way too quiet for a stock that actually got a couple of downgrades of this importance. So what's going on here? I'm not sure. It was like clockwork, 99.8. They did not want to let it go. Regardless, it contributed. It held the line. It wasn't an anchor. So markets had a better chance of running up. They threatened breaking down here, but still they held the good close. This was what happened today. Let's see where we stand over all the picture. Um, I'm going to switch right now over to the chart that shows weekly candles. You've seen me do that before. And this is the SPX. With today's exuberance, we still ended up with a red candle. Now I said that we need to maintain this or this, whichever where you draw the line. I have called it last week. And we maintained both as far as a close. See where the candle closed. However, we pierced both, obviously, decidedly so this week. And now I'm looking at a downward trend that I want to look at. First I was tapering, and now I'm far away from the upper end. So what's going on here? Now I'm going to look at the previous recent lows and see how we handle that. Okay, this is one, this is one. So it's on the radar, right? The story is a little different if I look at the SPY. I think the SPY ended up with a green candle for the week. A doji-ish candle, meaning undecisive, however, somewhat bullish looking. Again, pierced both ends, so the trend it's not intact. It got pierced, however, we did close above it. Now the Qs, I'll tell you what all of this means. The Qs did break the trend. This is a rising wedge, which often comes down, it resolves itself negatively, more often than not. Not doom and gloom, but now I'm looking at a roof here, so lower highs, and we're breaking again. I want to see how it handles this area right here. So this is where we stand. So to me, if I'm looking here and I don't know what's going on, and I just see this portion right here, I worry a little bit because look at the volume is getting higher as we're getting lower. So, that's kind of, a little worrisome. And the last climb up was on the dwindling volume. So Maybe if people are trading in the options market more, I'm not sure. It's just something to watch out for. So what do I do next week? Next week, first of all, I want to evaluate my thesis. My thesis, my global thesis has been that we have room to move up, but I don't see, 10% move or 5% move upwards from here on a jolt. I do leave room, so I short via credit call spreads with, a proper buffer, depends on the ticker, and I can go a few longs, and I've been shorting every pop, every relief pop. Now today is a pop. Is it a relief pop? Yes, but it could have some legs, a little different than the usual. Working with it is the fact that it came after such drubbing. Okay, so it might have a couple of days worth in it. And also working for it is the fact that we have alleviated the sense of, we repaired sentiment a little bit. Sentiment got so negative, and then you pile onto it the fact that the US is also economically breaking down. Today, that question got put to rest. So we didn't eliminate the headlines. The headlines are still there. They're still scary. We're getting used to them a little bit. But we fixed the sentiment. So we got the bounce on the sentiment. So that's the reason why I won't short all in at this pop. I'll give it a little breather. Maybe on Monday I'll try to short some while going long. Today, what did I do? I booked some profits and avoided some losses. That's what I'm going to do next week. I'm going to book profits in what I have and try to see if I can snipe a few longs. I dabbled in long Google, figuring it got a drubbing this week unexpectedly. Let's visit Google. And why did I go long Google? Because, whoops, maybe I should have chosen the Google L. Anyway, this will do. There are earnings coming up in October, and they are within the October expiration date, monthly. So I took longs yesterday on the drubbing, and this way I've set up my lotto ticket already. All I have to do is just sit back and wait. These are debit call spreads, and I chose October, so the premium is not going to dwindle much unless we drop again because of the uncertainty of the earnings. So that's the way I'm catching that knife. I also dabbled in catching knives with Priceline, and that paid handsomely in the week. And I'm going to try and rinse and repeat. Everything that's working, I'm going to do again. So I'm going to go a few longs of stocks or tickers that are worthy, and I'm going to be shying away from froth. And this is the small caps. This week, ugly, ugly, ugly. Remember last week we talked about this line right here. I'm going to go over in time today because it's important. And I was wondering what's going on, and now we broke down. So is this head and shoulderish? It is to me. I'm not a professional technical analyst, but the spirit is there. Ran, failed, tried to run, matched it, maybe bettered it maybe by a penny or so, failed, tried to match it again, failed a lot shorter than both times. So now, is the bull tired? Is this a tired bull, or was this a bear trap? So this is where the question gets asked. Now I'm also looking at this level right here. It did reject it, pierced it badly, but it did reject it on the close, though red candle. Today, the small caps this week had the best defense of all, and we noted it right from the get-go. However, they were not going to outperform, and I noted that earlier today. In fact, they underperformed. That's the knock. So still a coin flip as to where we go from here. We're not out of the woods. The bulls are not out of the woods. The bears are being lazy. All of the damage yesterday was done by headlines, not by bears' hard work. So I still say it. The bears are being lazy. They've got the bulls against the rope. They're not putting them away. Now, the next week we may come into Monday with a positive bias because of sentiment. However, I don't know how long it will last. Plus, I don't know how the overnight sessions will treat us on Monday. Plus, most importantly, headlines. What happens over the weekend? A couple and a half days is a long time, so a lot of headlines. If we don't get any headlines, we might get some additional bias, upward bias, because of the help we're going to get from the lift upwards. This is Nick Shaheen. Trade safely, use the options market. If you don't know how, reach out to me. I answer everybody. 10-3 is it? Yep. Signing off. Thank you very much.